It's time to reflect on the year that was. With a volatile trajectory, Nifty 50 was the second best performer in Asia at its close. The Nifty 50 index added nearly 19% this year after hitting a series of records high earlier in 2023. Indian stock markets saw strong gains in 2023, especially towards the end of the year, amid growing optimism over the Indian economy. Equity market investors turned richer by 80 lakh crore rupees in 2023 alone. Third quarter of GDP data also showed Indian economy was buoyant. It grew at 7%, vastly outpacing its global peers as manufacturing activity picked up and consumer spending in the country also picked up. There was optimism, sometimes even irrational exuberance. But after BJP's victory in the 3 out of 5 states that went for elections this year, markets clocked a record high. There was also general anticipation over the 2024 general elections, driving strong gains in Indian markets since late November. Will the momentum continue, and what can you take away from 2023? We'll discuss all of that with me, Suyash Maheshwari, here in the studio. Hi, Suyash. Also joining us is Ambareesh Baliga, independent markets expert. Before I get you, Ambareesh, let's quickly first get in Suyash. Suyash, it's been a wonderful year for Indian equities market and a year that made many people richer by as much as 80 lakh crore rupees. Run us through what were the key highlights of Indian markets in 2023?
Shweta. As you rightly pointed out, it was a phenomenal year, and I think to truly appreciate how the year went by, let us look at the timeline. We started we kicked off the year on a muted note. Both January as well as February were negative months for the market, and even up till April of this year, we were one of the worst performers among global peers. We were in the negative, we were in the red, whereas other global markets such as your S&P 500, such as your Nikkei, such as your Hang Seng were rallying somewhere around 10 to 15%. But that's when we turned a corner, and how? Not only did we manage to pare all those losses, but by July, we were at record high levels. Now, the market did turn a bit choppy after that, but a strong recovery was seen in November and December, which by the way were the best months for the market in the whole of 2023, and we have in fact once again scaled to record high levels and pretty much hitting them and moving into uncharted territory on a daily basis. Now, with 20% or thereabout surge in 2023, the Nifty index has delivered positive annual returns for 8 years in a row now. Now, this is unprecedented. No other market has been on a bull run this long, and Indian markets have pretty much outperformed, and that's where you see the conviction between the market participants. And if you think that 2023 was a great year for the headliners, it was the broader markets that did the hard labor. They moved, and they delivered phenomenal returns to the investors. Now, Nifty Mid-Cap 100 in 2023 surged by about 46%, and this was the best year for the mid-cap index since 2017. The small-cap index, on the other hand, surged about 55% or so, and this was its best performance since 2021 and the third best year for the index in over a decade.
Absolutely. What a phenomenal set of returns there from Indian markets. Ambareesh, I want to straight up jump into what can our retail investors take away from the year that was? What were, according to you, the highlights of the year, and what does it tell you about what's going to come in 2024?
See, I think the main highlight of the year for the Indian markets was, irrespective of whatever is happening across the globe, Indian markets can only move one way, and that is upwards. I think that's the takeaway for this year. But unfortunately, the first-time investors will assume that this is the way the life goes on in the markets, and they will never correct. And it's very much possible that, they will be the ones who will get caught on the wrong foot when the markets correct, because we have seen, we have looked at a history that markets do correct, and when they correct decently sharply, especially after a move like this. Like you rightly said, we have seen 7 years of upward move till date, but this is the first time we are seeing an 8-year continuous upward move. So I think 2024, when we get into that, I think we should be a bit careful, because don't really expect the sort of a move which we have seen in 2023 to again continue throughout that year, because it's an election year also. And after nearly a 20% return, expecting again, I mean, I think most of the people would still be expecting a similar sort of a return or more. I think that could be a bit difficult and we could have a disappointment. And one more data point I would like to give you is that in 2023, I mean, we have what about 2,500 shares being quoted in the market. I mean, scripts being quoted in the market. 600 stocks have been multi-baggers. And when I say multi-baggers, I'm talking of 2x to about 10x. And out of the 600 stocks, I mean, all these are, I mean, these are not penny stocks. When I talk of these 600 stocks, I mean, I picked up stocks which are quoting about 20 rupees, not below 20 rupees. And I mean, about 50 stocks out of these are in the top 500. So I don't think the markets have really given this sort of a return. I mean, in the broad market, just not the index, the broad market, I mean, till date.
Okay.
So,
Now,
yeah,
Mr.
but then,
Baliga, yeah.
yeah.
Now, you were talking about this brilliant rally that we have seen play out in the broader markets, but still relatively large caps were the laggards. Do you think they will play catch up in 2024?
I mean, they could play catch up for a while in 2024 because, see, I mean, I don't think there'll be a sort of a budget rally because this will be I mean, it will not be a full-fledged budget. It will be more of a sort of just filling up till the elections are over. And post that, we will have elections. I mean, it could be earlier than May. That's what the talk is there on the, I mean, like in the market. And generally, I mean, despite the fact that most of the people are decently sure as to the incumbent government can come back, but elections being elections, I mean, could be uncertain. I mean, we have seen that happening in 2004. So before the elections, maybe a month and a half, 2 months, you'll see a lot of volatility in the markets. And that's the time you'll see that the markets are not really going anywhere. And that could disappoint a lot of investors who have been used to seeing huge returns, I mean, week on week, month on month. I think that's the time, I mean, that could be a testing time for
Okay.
most of the investors.
All right. And before we move on, you briefly mentioned that valuations are currently not justified, and we also touched on how sometimes the exuberance has also been irrational in the past couple of months. Given that, what are the chances of profit booking in the near term? You said markets are going to be volatile. That is till elections, but what's your medium to long-term outlook over the year?
No, I mean, see, if you're talking of long term, as far as India is concerned, I don't think you can really go wrong. You can't be bearish on India. And again, I mean, this time is my assumption is based on the fact that BJP comes back post elections with a much better majority. Because if that's not the case, I really don't know as to what sort of a I mean growth we could see going ahead. But
Okay.
then, assuming that they come back, I don't think you can go wrong in India. I mean, over a longer period of time. But then, as of now, the valuations are a bit too stretched, and I mean, I don't really see too many people booking profits. But then, at some point of time, people would be forced to book out because if you have the markets correcting beyond a certain level, because we have seen a 300-point correction on the Nifty, and that just lasted, I mean, for a day or two. But then we don't know as to how the people will react when, in case the markets correct by 800,000 points, which is not too much looking at where the Nifty is. I mean, a 4-5% correction is nothing much, but most of the people will be seeing that sort of a correction for the first time, and you don't know as to how they will react to it. Whether they'll consider that as I mean, a buying opportunity, a discount sale like what we saw a couple of days back, or whether they'll panic. Because in case they panic, we could see much lower levels.